Welcome to the Pro Ticker Deep Dive.
Yeah, it is great to be back. And honestly, I don't think we've ever had a topic quite this electric to discuss today.
Electric is definitely the word. I mean, if you've been watching the wires this week, and we're recording this in late February 2026,
Right.
you know that the tectonic plates of the technology world aren't just shifting, they are literally slamming into each other right now.
It's a restructuring event. I mean, that is the only way to accurately describe it. We are seeing a fundamental reshaping of the artificial intelligence hardware market.
Happening in real time.
Exactly, in real time.
It's wild. Usually when we sit down to talk about a big deal in tech, we're talking about market cap or maybe a flashy acquisition price.
Sure, dollars and cents.
Right. But this week, the number that is dominating all the headlines isn't a dollar sign at all. It's a unit of power.
That's right. The headline event that basically has the entire industry scrambling is this colossal agreement between Meta Platforms and AMD.
And while the financials are staggering,
Oh, they are.
the metric that actually matters here is energy.
Yes. The number is 6 gigawatts.
I had to read that 3 times when the news dropped.
I think we all did.
I actually thought it was a typo in the press release.
Hmm.
I thought, surely they mean 6 gigawatts of capacity over the decade, right? But no.
6 gigawatts. To put that in perspective for everyone listening, because, gigawatt is a term we usually hear in Back to the Future movies.
Right, exactly. 1.21 gigawatts.
Exactly. We don't hear it on earnings calls.
Yeah.
A standard nuclear power reactor generates about 1 gigawatt. Maybe a little less, depending on the plant.
So Meta isn't just buying chips.
No.
They are effectively securing the output of 6 nuclear power plants worth of compute.
That's the reality of it. It's a fascinating shift in the nomenclature. We have moved entirely past counting chips.
We aren't asking how many GPUs did you buy anymore.
Right. In 2026, the currency of AI is energy capacity. If you have the power, you have the intelligence.
And if you don't have the power,
You're just writing code in a notebook. You're completely irrelevant.
it's massive. And looking at the financial reports swirling around this, we're seeing valuations on this deal hitting up to $100 billion.
Over the lifetime of the partnership. Yes. Which is a number that is almost difficult to comprehend.
$100 billion.
That is the GDP of a mid-sized nation.
But here's the thing, and this is why I'm so excited to really tear into this deep dive today. This isn't just Mark Zuckerberg writing a check for some new graphics cards.
Far from it.
This feels like a regime change. It feels like the end of an era.
It is a shift in power dynamics, without a doubt. For the last few years, really since the AI boom kicked off properly in 2023, we've been living in this NVIDIA monopoly.
It was unipolar world.
Completely. If you wanted AI, you bought NVIDIA. You pay the NVIDIA tax, you waited in line for 18 months, and you thanked them for the privilege.
You took what you could get, and you were happy about it, because the alternative was basically irrelevant.
Precisely. But this Meta and AMD deal signals that the monopoly is finally fracturing.
And it's not just the scale of the deal, but the way it's structured that is raising so many eyebrows across Wall Street and Silicon Valley.
Oh, the structure is absolutely wild.
We are going to get into the weeds on this because I saw the term penny warrants, and I honestly thought I was looking at a penny stock forum.
Right, or some distressed asset restructuring.
Exactly. I didn't think I was looking at a deal between two S&P 500 giants.
It does sound like financial engineering voodoo, doesn't it?
It really does.
But it's actually a very specific, very aggressive tool to align incentives. It essentially allows Meta to buy AMD stock for 1 cent.
1 cent. I mean, I can't even buy a gumball for a cent anymore.
Not for decades.
So let's map out where we're going today because there are so many layers to this onion.
Let's do it.
First, we are going to tear apart this Meta and AMD behemoth. We need to understand the hardware. What is the MI450 and why does Meta want it so badly?
And then we have to look at the money. That penny warrant twist you mentioned.
Why are they doing it, and is it brilliant or is it incredibly dangerous?
And then we have to talk about the 800-pound gorilla in the room.
NVIDIA.
Because they aren't taking this lying down.
No, they certainly aren't. We need to look at the Rubin architecture they're pushing and this very interesting, somewhat surprising pivot they're making back into the consumer space.
It's a massive shift.
Why is the company that owns the data center suddenly interested in my laptop?
It's a key strategic pivot we have to unpack.
And finally, we have to look at the software side, the moat that is CUD.
And ask if it's finally drying up.
Exactly. And of course, we have to address the skeptics, because there are a lot of people yelling bubble right now.
The circular economy concerns.
It's a scary thought, but we have to go there for the listener.
Yes, really do.
So let's dive right into section 1. the 6-gigawatt behemoth.
Let's get into it.
Okay, so the ink is barely dry on this, but here is what we know so far. Meta is committing to a massive purchase of AMD AI infrastructure.
And the timeline is fast. Deployment is starting in the second half of this year, 2026.
That is remarkably aggressive.
It's unprecedented. Usually these deployments take massive lead time. You have to build the physical data centers.
Pouring the concrete.
Yes, pouring concrete, sorting out the liquid cooling, massive power delivery substations. The fact that they are aiming for H2 2026 suggests Meta has been planning this for a very long time.
So they've had the shells of the buildings ready.
They were just waiting for the silicon.
And they aren't buying off the rack, are they? This isn't just going to Amazon and clicking buy now on a few thousand cards.
No, and this is a key detail that I think a lot of the mainstream reporting entirely missed this week.
Okay, lay it out for us.
They are focusing on the AMD Instinct MI450 series, yes. But in many of the technical documents and the supply chain leaks we're seeing, there are references to the MI455X.
The X factor.
Exactly. In semiconductor nomenclature, that X, or a custom suffix, usually denotes a client-specific modification.
So this is a bespoke suit, but made of silicon.
That's a great way to put it, yes.
So what does that mean in practice? What is Meta getting that I couldn't get if I just called up AMD and said I wanted some chips?
It likely comes down to memory and interconnects. You see, Meta has very specific workloads. They're training llama models.
Dense, massive language models.
Right. They probably needed specific memory bandwidth ratios or specific networking capabilities to link these thousands of chips together efficiently.
Because the bottleneck isn't always the math, it's the traffic.
Precisely. So AMD likely went in and tweaked the die or the packaging to fit Meta's exact data flow needs.
And they're pairing it with AMD's 6th-generation EPYC processors, right? So it's a full AMD stack, CPU and GPU.
Which is incredibly significant. It's a coherent platform.
Right.
When you control both the CPU, which is the brain that directs traffic, and the GPU, the muscle doing the heavy lifting,
You can optimize the data flow.
in ways you simply can't if you're mixing a vendor like Intel for the CPU and NVIDIA for the GPU.
Now, I have to ask, if Meta is going all AMD for this massive 6-gigawatt chunk of infrastructure, what does that say about AMD's technology?
It says everything.
Because for years, the narrative I always heard was AMD is the budget option. AMD is the backup plan.
Right. This is the validation event AMD has been waiting for a decade. This is what we call Tier 1 validation.
Meaning you don't mess around at this scale.
You do not deploy 6 gigawatts of power against 6 nuclear plants worth of juice on a budget option.
The risk is too high. If the hardware fails, Meta falls behind Google and Microsoft, and they might never recover.
Exactly. You don't bet the future of your AI roadmap, effectively the future of your entire company, on second-best hardware just to save a few bucks up front.
This signals that in terms of raw performance per watt and reliability, AMD has caught up.
They have crossed the threshold of good enough and officially entered the realm of elite.
The market certainly agrees. I was watching the tickers this morning. AMD surged, what, 14, 15%?
Depending on exactly when you looked, yes,
Yeah.
there's a massive rally. And notably, NVIDIA and the other semiconductor players were flat or dipping slightly.
Why is that, though? Why wouldn't a rising tide lift all boats? Usually when big AI news hits, the whole sector goes up.
Because the market perceives this as a zero-sum game in the short term.
How so?
The logic is brutal. If Meta is spending $100 billion with AMD, that is $100 billion they are actively not spending with NVIDIA.
Or Broadcom, or Marvell.
Right. The pie is growing overall, yes, but AMD just took a massive slice that everyone on Wall Street assumed inherently belonged to NVIDIA.
It moves AMD firmly into the big leagues.
It cements them as a primary infrastructure partner. But there's a strategic layer here for Meta, too. We have to look at this from Zuckerberg's perspective.
Why do this? Why switch when you have the dominant player, NVIDIA, already running in your data centers?
Exactly. Switching costs are real. Engineers hate learning new systems.
Well, I've been reading a lot about the supply chain bottleneck. It seems like even if Meta wanted to buy only NVIDIA, they physically couldn't get enough chips.
That's the happy problem the industry is facing. We've seen reports that TSMC, the Taiwan Semiconductor Manufacturing Company, the foundry making basically all these high-end chips,
Right.
they're fully booked on their 3-nanometer process through 2027.
Through 2027. So we're in early 2026 now. That is nearly 2 years of being completely sold out.
And it's not just the silicon wafers themselves. It's the packaging, the CoOS.
Chip on wafer on substrate.
Yes. It's the advanced glue that holds the memory and the processor together. That is the actual bottleneck.
So NVIDIA can't even get as many chips as they want to sell.
Right. NVIDIA has booked a huge chunk of that TSMC capacity, but they can't book it all.
So if you are Meta and you need to train Llama 4 or Llama 5, you cannot rely on a single vendor who is capacity constrained.
You literally cannot. If NVIDIA says, sorry, your order is delayed 6 months,
Yeah.
and Google gets their chips on time, you lose.
In the AI arms race, a 6-month delay is an absolute eternity.
So you have to diversify.
You have to spread your bets. Moving to AMD isn't just about price, it's about survival.
It's about supply security. It's ensuring you have the raw compute to keep up with the competition, regardless of what happens in NVIDIA's supply chain.
It's the classic, don't put all your eggs in one basket, especially when that basket is overflowing and on back order.
Precisely. And notice the shift in language of the press releases. Meta isn't just buying chips.
Right. They are engaging in full-stack co-design. I wanted to touch on that.
It's a very deliberate phrase.
Full-stack co-design. It sounds a little like marketing fluff, to be honest. What is the practical difference between buying chips and co-designing them?
Buying chips is purely transactional.
Yeah.
I need 10,000 GPUs shipped to my warehouse in Ohio.
Here's the check.
Right. Co-design is a deep partnership. It means Meta's engineers are sitting down with AMD's architects in Austin and Santa Clara.
They're sharing code.
They're saying, our software runs exactly like this, so we need the hardware memory bandwidth to behave exactly like that.
They are tweaking the firmware, the drivers.
Potentially even the hardware physical layout of the MI455X, specifically for Meta's workloads.
Which locks them in tighter, doesn't it?
It creates a much, much stickier relationship. You don't co-design a chip for a one-off purchase.
Because it's too expensive to do that.
Right. This is a 5-year roadmap. It means Meta is committed to the AMD architecture for the long haul.
So AMD gets the validation, Meta gets the supply security. But let's talk about the money, because this is where it gets really interesting.
It honestly, a little complicated.
Very complicated. The warrant structure, Section 2, the penny warrant twist. I feel like we need a dramatic sound effect for that.
It deserves one. It's a fascinating piece of financial engineering.
It sounds like something from a heist movie.
It's aggressive, it's clever, and it raises a lot of questions.
So break it down for us. Meta buys chips, but they also get the right to buy stock.
Yeah.
How does this actually work in practice?
Okay, so as part of the deal, likely as a massive sweetener to convince Meta to take the risk on AMD hardware, AMD issued warrants to Meta.
A warrant is basically an option to buy shares at a specific price, right?
Exactly. In this case, Meta has the option to buy up to 160 million shares of AMD.
And the price they pay for those shares is the real kicker here.
The strike price is 1 cent.
1 penny.
For all intents and purposes, yes, effectively zero.
Okay, so let's do the math here for everyone listening. If AMD stock is trading at, say, $200, and Meta can buy 160 million shares for a single penny each.
That is billions of dollars of instant profit.
It's immediate realized value. But, and there is always a but, these warrants vest based on milestones, don't they?
Right. Meta doesn't get the shares just for signing the paper on day one.
Ah, so there's a catch.
The catch is execution. The warrants likely vest based on shipping volume, performance targets, and deployment timelines.
Meta gets the shares when AMD actually delivers the goods and Meta plugs them in and turns them on.
Exactly.
So why do this? Why not just give them a standard discount? Why not just say, hey, Zuck, we'll knock 20% off the sticker price of the hardware? That seems so much cleaner.
That's a billion-dollar question. Why complicate it with equity? Well, for Meta, this is vastly better than a discount. It's an equity rebate.
Think about the psychology and the economics of that.
Exactly. If this partnership is successful, and Meta buys billions of dollars of AMD chips, showing the world that AMD is a real contender.
What happens to AMD's stock price? It goes up. The market loves validation.
Right. So Meta helps AMD's stock go up simply by buying their products. Then Meta gets to buy that newly expensive stock for a penny.
They are profiting from the very growth they are fundamentally funding.
It lowers their total cost of ownership, their TCO, drastically.
If the stock doubles, the effective price Meta paid for the hardware drops significantly because they made billions on the back end via the stock market.
That is incredibly clever.
It's like buying a house and getting equity in the construction company that builds it.
That's a perfect analogy.
If the house is nice, the company value goes up and your equity pays for the house.
Precisely.
But what about for AMD? Why would they dilute their own shareholders like this?
I assume to buy loyalty.
That has to be it.
It buys loyalty, and it buys guaranteed volume. It locks Meta in. You can't just walk away to another vendor if you have billions of dollars of potential equity tied to hitting volume targets with AMD.
It's paying for a customer with pieces of your own company rather than cash discounts.
Because cash is expensive for AMD to give up right now. They need cash for R&D equity.
Yeah.
Equity is paper.
And this isn't the first time we've seen this exact playbook, is it? I recall some rumors about OpenAI doing something very similar.
You're spot on. There were reports, and it's largely confirmed by the market structure now, of a similar setup with OpenAI.
Involving a stake, potentially via warrants, in exchange for chip supply.
So this is clearly the new playbook for AMD.
They are using their equity, which is a high-value currency right now because of the whole AI boom, to subsidize their entry into the high-end market.
They are effectively bribing the biggest customers in the world to break their NVIDIA addiction.
Bribing might be a strong word for the lawyers, but
Let's call it heavily incentivizing.
heavily incentivizing, I like that. But it works. If you're the CFO of Meta and you see a clear path to getting 160 million shares of a soaring stock essentially for free.
That makes the decision to switch from NVIDIA a lot easier to sell to your board of directors.
It certainly smooths over any technical anxieties the engineering team might have about switching architectures.
It perfectly aligns the financial destiny of the supplier and the customer.
But speaking of switching architectures, let's pivot to the incumbent here. Section 3, NVIDIA's response.
We have to talk about them.
Because I imagine Jensen Huang isn't just sitting in his leather jacket crying into a pile of H100s right now.
Far from it. We have to keep our heads on straight here. NVIDIA is still the titan of this industry.
We're talking about a company valued in the $4.7 to $5 trillion range.
They are trading at a PE of around 47. The market still fully expects them to dominate.
And Meta hasn't dumped NVIDIA, right? That's an important caveat.
No, not at all. That's a crucial distinction to make for everyone listening. Meta is diversifying, not replacing.
They are still buying millions of NVIDIA's new Vera Rubin GPUs and Grace CPUs.
Let's talk about Rubin for a second.
Right.
This is the successor to the Blackwell architecture.
Yes, the R100 series. It's named after Vera Rubin, the astronomer who confirmed the existence of dark matter.
Cool name. NVIDIA always nails the naming convention.
Very cool. And the specs on this thing are formidable. It uses HBM4 memory.
The next generation of high bandwidth memory.
Can we pause on HBM4 for a second? Why is that specific memory type so important?
So in AI processing, the bottleneck is often not how fast the chip calculates. It's how fast it can move data from the memory to the processor.
Feeding the beast.
Right. HBM4 is like widening the highway from 8 lanes to 32 lanes. It allows massive amounts of data to flow instantly.
Rubin creates a vertical stack where the memory is bonded directly to the GPU.
NVIDIA is pushing the absolute bleeding edge of what physics allows regarding transistor density and thermal management.
So how does that actually compare to what AMD is selling Meta, the MI450?
It's a battle of philosophies. NVIDIA's Rubin is the do-everything fastest possible chip.
It's a beast for training the biggest models.
If you want to build GPT-6, you probably need Rubin.
And AMD.
AMD's MI450, and especially the customized MI455X, are aiming for efficiency and scale.
So it's not about being the absolute fastest.
The argument AMD is making is, hey, for inference, for actually running the AI, when you and I ask it a question on our phones, you might not need the absolute most expensive power-hungry chip.
You just need the most efficient one.
That makes total sense.
Yeah.
Training is the flashy part. It's the PhD student spending years learning the material.
Inference is the graduate actually out there doing the job day in and day out.
Exactly. And there are way more graduates doing daily jobs than students learning. The volume is an inference.
Meta needs to serve AI responses to billions of users on Instagram and WhatsApp every single day.
They need efficiency at a massive scale.
But NVIDIA has another move up its sleeve, and this one really caught me off guard when I read about it.
The consumer pivot.
Yes. NVIDIA re-entering the PC market in a big way. I saw this headline and thought, wait, aren't they already in PCs? I have an NVIDIA card in my gaming rig right now.
True. They dominate discrete graphics for gamers. If you build a custom PC, you buy a GeForce card. But this is entirely different.
How so?
They are partnering with MediaTek to build ARM-based processors and continuing to work with Intel on x86 architectures.
They want to put powerful AI cores directly into laptops.
Competing with the central CPU itself.
Oh, so they're coming for Apple.
Directly. They are looking at the MacBook Pro with Apple Silicon and saying, we can beat that.
They want to target battery life and on-device AI.
Why, though? If you're making trillions of dollars in the data center, why bother with consumer laptops? The margins on laptops are razor thin compared to selling a $30,000 server chip.
It seems like a distraction.
It's actually brilliant for two reasons. First, diversification. Pure data center risk is real.
If the AI bubble bursts, or if power constraints stop data center builds, NVIDIA needs another revenue stream.
But more importantly, it's about the ecosystem.
Embed CUDA everywhere.
Exactly. It is entirely about the developers. If every computer science student has a laptop with an NVIDIA AI core that runs CUDA natively and efficiently,
They are going to build software for NVIDIA data centers when they graduate.
it keeps the lock-in alive from the moment a developer writes their first line of code on a plane or sitting in a coffee shop.
That is incredibly smart. It's playing the long game, winning the hearts and minds of the next generation of engineers.
It ensures that the default platform for AI remains NVIDIA, top to bottom.
But, and here comes the big but, that default platform is currently under attack. Which brings us to Section 4. The moat is leaking.
The software wars. This is arguably more important than the hardware specs we just talked about.
For the longest time, whenever I talked to tech people, they'd say, the hardware doesn't matter, it's CUDA. Nobody can quit CUDA.
CUDA, Compute Unified Device Architecture. It's NVIDIA's proprietary software layer.
Think of it as the language you have to speak to actually talk to the chip.
And for nearly 2 decades, it was the gold standard. If you wanted to do scientific computing or AI, you wrote in CUDA.
And CUDA only runs on NVIDIA hardware.
Perfect monopoly, perfect lock-in. If you wrote your code in CD, you were physically incapable of running it on an AMD chip.
It was a brilliant strategy. Build the software moat, and they can never leave your hardware castle.
But that moat is eroding fast. And the challenger isn't another proprietary language.
It's open source.
PyTorch.
PyTorch. It's an open source machine learning framework, originally backed largely by Meta.
Which brings us full circle to why Meta is suddenly so comfortable buying AMD hardware.
So explain this to me like I'm 5. What does PyTorch do that hurts NVIDIA so badly?
PyTorch acts as a universal translator. It sits above the hardware.
Okay.
In the old days, you wrote code specifically for the chip using CDA. Now, you write code for PyTorch, and PyTorch handles the messy translation down to the hardware.
So if PyTorch runs on AMD,
Then the developer doesn't need to care that it's an AMD chip.
mm-hmm.
And PyTorch runs beautifully on AMD via their ROCm software.
It runs on Apple Silicon, it runs on Google TPUs.
It abstracts the hardware away entirely.
It turns the chips into a commodity.
That is NVIDIA's absolute nightmare. If the software works equally well on everyone's chip, then the chip becomes a commodity.
You just buy the cheapest or the most energy efficient one. You don't buy the brand name.
And we're seeing actual proof that this works right now, right?
Right.
It's not just theoretical someday tech.
No, it's very real. Look at Oracle.
Oracle Cloud.
Oracle is deploying a supercluster of 50,000 AMD MI450s.
50,000. That is a city of chips.
That is a massive public cloud deployment. This isn't an internal experiment where meta engineers are tweaking things in a basement lab.
This is Oracle selling raw compute to the general public.
It proves that the software stack AMD's ROCm running PyTorch is mature enough for general-purpose enterprise use.
That feels like the tipping point. If I'm a startup CEO, and I can rent AMD compute on Oracle for 30% less than NVIDIA, and my PyTorch code runs just the same.
Why wouldn't you?
Exactly. The software gap was the only thing justifying the massive price premium for NVIDIA. If that gap closes, the economics of the entire industry change overnight.
So we have massive competition, closing software gaps, and huge deals measured in gigawatts. It sounds like a booming, healthy market.
But
we have to talk about the elephant in the room. Section 5. The bubble anxiety.
the skeptical view.
I spent some time reading through investment forums and deep dive Reddit threads this week, and while everyone is excited about the tech, there is a lot of real anxiety about the money.
Specifically, this circular economy idea.
Yes, the vendor financing fear. Break that down for us. What is the core risk here? Why are people throwing around the word Enron?
The risk is that the revenue isn't organic. Let's look at the actual flow of money.
Okay, follow the money.
AMD gives Meta stock via those penny warrants we talked about.
Right.
Meta uses that incredible stock value to justify buying AMD chips.
Yeah.
AMD then records that purchase as massive top-line revenue.
So AMD is effectively paying Meta to buy its own chips.
In a roundabout way, yes. The concern from the skeptics is there real end-user demand generating actual cash at the bottom of this entire pyramid?
Or is it just massive companies trading equity back and forth to inflate their revenue numbers for Wall Street?
It sounds a little bit like, well, people are bringing up the dot-com fiber bubble.
Where telecom companies bought capacity from each other just to book revenue.
Or Enron.
You said it, not me. But that's the scary comparison.
Enron had complex partnerships where they booked value from future promises and obscure structures. The risk is round-tripping.
If the AI hype slows down, if regular businesses stop paying for AI enterprise subscriptions, if the revenue from AI doesn't actually materialize.
This whole daisy chain snaps.
Because if AMD's stock price drops, the warrants they gave Meta are suddenly worthless?
If the warrants are worthless, Meta stops buying the hardware.
If Meta stops buying, AMD's revenue crashes.
And if AMD's revenue crashes, the stock drops even further. It's a brutal reflexivity loop.
It works great on the way up. Everyone gets rich. Valuations soar to the moon.
But on the way down, it unwinds incredibly painfully.
Round tripping with an extra step? That is a chilling phrase if you're holding these stocks.
It is. And it's why we are actually seeing some caution from the very top of the industry right now. Did you catch Jensen Huang's comments recently?
About the OpenAI investment.
Yes. There were huge rumors swirling that NVIDIA was going to invest $100 billion directly into OpenAI.
But Jensen walked that back publicly.
He did. He called it a ceiling, not a hard commitment. He clarified that they're being very careful.
That's telling. Even the guy selling the shovels in the gold rush is saying, whoa, let's not get too crazy with the credit card here.
It shows that even the absolute leaders are aware of the volatility. They aren't just blindly throwing capital around.
They know that overcommitting in a bubble can be fatal. They remember 2000. They remember 2008.
So where does this leave us at the end of the day? We've got a 6-gigawatt power deal, penny warrants, a software revolution, and a looming fear of a massive bubble.
It leaves us in a bifurcated world.
How so?
We are seeing a hard split in the market. NVIDIA is holding the high ground, the absolute bleeding edge of training the smartest, biggest models.
If you need to build the next GPT-6 or GPT-7, you probably still use NVIDIA Rubin chips.
But for everything else.
For inference, for widespread consumer deployment, for the daily workhorse tasks, AMD and others are grabbing huge chunks of the market.
The pure monopoly is over. It's now a duopoly, or maybe moving toward an oligopoly.
And the warrant model we spent so much time on.
That suggests a future where the hyperscalers, Meta, Amazon, Microsoft, essentially own parts of their core suppliers.
They are vertically integrating not by building the silicon factories themselves, but by owning the equity of the companies who do.
Which gives them total control over their supply chain without the capital expense of building a foundry.
Exactly.
So we've unpacked the deal, the tech, and the money. But before we sign off, we always like to leave you, the listener, with a final provocative thought, something to chew on.
Here's the question I've been asking myself all week. If Meta and OpenAI effectively own significant chunks of AMD via these warrants,
And they are also AMD's absolute biggest customers.
does true competition in the chip market even exist anymore?
Or are we just moving toward a world of vertically integrated cartels?
Where the customer and the supplier are essentially the exact same entity, just wearing different corporate hats.
That is a little dystopian, frankly, but also fascinating. It rewrites the traditional rules of capitalism a bit.
It's the new reality of big tech. We have to adapt to it.
Well, on that cheerful note, thank you for guiding us through the gigawatts and the penny warrants today.
Always a pleasure to dive in.
And thank you to everyone listening to the Pro Ticker Deep Dive. Keep an eye on those tickers, and we'll catch you next time.